We're talking about Delta, Walgreens, and Dominos in today's earnings exchange. And here with our trades, we welcome back Jeff Kilberg, KKM's financial. I did that last time too, Jeff. You think I'd KKM Financial founder and CEO.
You're good.
Thank you. Stand by as we talk some Delta. It's been in steady descent since July, down 13% in September alone. B of A writing that pricing across the industry has been weak, and costs for planes, fuel, and maintenance have all risen. And recent flight cancellations to Israel are only worsening the outlook. You think they can pull out of this? Would you be a buyer here, Jeff?
I am a buyer here, and yes, it has been Mayday for all the airlines. But if you look at Delta, I believe Delta is an essential name. We actually own in the Essential 40 portfolio. It's twice the size of United. It's 3 times the size of American Airlines. And I think if you look at the last 3 months, it's absolutely been in a free-for-all. You're right, down about 25%, still up about 9% year to date. But when I travel, going to see advisory groups or family offices across the country, Kelly, I still see just absolutely not one single available seat on the airline. So I think you will see demand come back. But yes, the overarching theme is that we are questioning the consumer appetite inside of all this high inflation, inside of the high gasoline costs that you talked about. But I think it has the opportunity to go back up to $41. That's a pretty substantial move, about 15% higher. But that lines up really well with the 50-day moving average. So I think technically, Kelly, Delta's oversold, and I think I want to be a buyer, and I am an owner.
All right, 35 right now. We'll hear from them in the morning. We'll also hear from Delta CEO Ed Bastian in a CNBC exclusive, talking earnings around 7 a.m. Eastern time. We'll move on to Dominos now, which has given up much of its summer rally with a 9% slide last week. It's holding on to less than a 3% gain this year. They're hoping to entice customers with that Uber Eats partnership and a more generous new loyalty program. Stiefel says the promotions should increase buying frequency, and losses, they say, should be partly offset by, among other things, lower cheese costs. So, Domino's, the stock of the 2010s. Would you be buying it here, Jeff?
I'm not a buyer, but obviously I'm a consumer and eater of many pizzas. But nonetheless, if you look at this, I just don't want to own Domino's. Any metric you look at it, Kelly, a year to date, 1 year, 3 year, 5 year, it's underperformed. I actually own Chipotle instead of it. And if you look year to date, that's about a 38% difference. And I just think it's in a lower valuation for a reason. You look at the forward PE, the lower end of its range on a historic 5-year perspective, that is for a reason. So until I see some type of catalyst, I want to be a seller here of Domino's, despite the fact I am a pizza lover.
All right, you should do your own You should just go around and taste pizzas and rate them, and we'll make that a thing.
That'd be great.
Yeah,
that'd be great.
Who wouldn't want that job? All right, finally to Walgreens, which has lost a CEO, a CFO, and 25% in the past 3 months. As Mizuho says, they're looking to rebalance their retail and healthcare arms. Bouncing slightly today on the announcement of that new incoming CEO, Tim Wentworth. He's the former CEO of Express Scripts, the largest PBM or pharmacy benefits manager before it was bought by Cigna. You like Wentworth, if I'm not mistaken. So would you buy the stock here on a turnaround?
Yeah, I mean, look, it's 77% off its all-time high. So you think I have to question my buy rating on this. But Tim Wentworth, that's like signing Tom Brady. He was at Pepsi. He was at Mary Kay. He obviously at Express Scripts. He is an absolute stud. So I think you're seeing some investor appetite. But if you want to be careful, if you want to approach this long with options, you can sell puts here. You can also buy upside calls if you're not comfortable buying. But I think at $22, when you look at historical valuation, the forward PE ratio of Walgreens has been about from 5.5 up to nearly 12 over the last 5 years. That's the average. Right now, it's trading at a 6 times forward PE. I think from a value, a discount perspective, I think it's on the bottom. I want to be a buyer here, but be very careful with this. But Tim Wentworth, he's a stud.
All right, so triple that we'll hear from, a trifecta in the morning. Real quickly, Jeff, your 2 cents on kind of bond yields at this point. We did see them touch some lows earlier in the session, move a little bit higher. You think that's what's putting pressure on the market?
You know, we talked about yields just about a week ago, and I was a believer when it was trading 4.85 in the 10-year note that we would see 4% before 5%.
True.
Pretty bold and lonely call. The catalyst was we had no idea that we would see the atrocities over in the Middle East to move those yields lower. But I think you're seeing a lot of people cover their trades. Look at Bill Ackman. He talked about it going to 5%. It's the beauty of a big hedge fund manager covering their position. That was a great trade for Bill Ackman and many institutions. So I think you saw an overcrowded trade as people were selling the futures, which is obviously inversely related to the yields going higher. So I think the 10-year note, once we see some dust settle, not just geopolitically, but just in the trading clear, I think you'll see it back under 4.5%.
Oh, wow. All right, Jeff, we appreciate it. Thanks for all your time today. It's good to have you.
Thank you, Kelly.
Jeff Kilberg with KKM Financial.